please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day, also get you some expert advice on how you can capitalize and trade. I'm Nigel D'Souza and with me is Manglam Malu. Hey Manglam.
Hi Nigel, good to see you back, and as you're back, if you take a look at the Nifty as well, it's been a choppy first hour of trade, but as we see you and it's in the green again. If you pull up both the HDFC Bank as well as HDFC Limited, both those twins trading at the high point of the day, contributing to the last bit of up move that we're seeing on the Nifty. The highest contributors there, Infosys too, doing fairly well. But first up, let's take a look at all the top stories that we're tracking at this point in time. Tata Communications gains after the board approves its demerging, the demerger of surplus government land through a special purpose vehicle, Hemisphere Properties, but the stock is off the high point of the day.
And Pratap Snacks gains close to 4% on the back of a strong quarter. The profitability jumped up by 143%, while the revenues come in higher by around 10% at 263 crores.
Oberoi Realty trades in green after the brokerage firm Motilal Oswal initiates coverage with a buy call, sets a target price at 580 rupees per share.
And another stock that's reacting positively is Chand after Credit Suisse initiates coverage on the stock with the outperform rating. They've set their target price at 625 rupees per share.
Manpasand Beverages, that one rallies in trade up almost 8% after the RBI increases FII investment limit in the stock from 24% to 49%.
Okay, all right. It's quite a nervous looking screen actually. The Nifty is fluctuating between the red and the green terrain. In fact, we're holding high with a gain of close to around 10 points approximately. But fair to say, it's been fairly nervous in today's trading session. A couple of stocks in the mid-cap space that are buzzing around. We have a lot of alerts that are coming in there from our ticker team. But pull up Camlin Fine. I think we should get that stock up for you in the screen. And otherwise, a dull market. Camlin Fine, suddenly that stock has spiked up. So just keep an eye out on that one as we speak. It's moved to the high point of the day. Volumes as well are picking up. But let's get a quick check on the technicals of the market. Then Ashwani Gujral is with us. Hi Ashwani, good morning. In the morning you had a short call at the high point of the day. Well, you'd be making some money if you did a short when the Nifty did open up. Are you still holding on to that short call?
See, short call does not mean you take short call and go to sleep. You take profits because the market fell from where I went short.
Right.
What I want to do now is that if I have to do something, I want to go long and see what happens. Okay. Why? Because chances are by the time today's day ends, there could be some amount of short covering, basically because we are still holding on to yesterday's lows.
Okay.
So given that the market is now kind of failing to make fresh lows, it's possible that as and when bears realize that maybe there isn't life at lower levels, you'll start seeing short covering. So right now is a good idea to take intraday long. So again, it's going to be volatile. It's going to be like yesterday. Try to keep damages low. I still maintain the bigger money will be made tomorrow when you know which way the market is going and you'll get good follow through.
Interesting one.
As far as individual stocks are concerned, Natco Pharma is a buy with a stop of 980, target of 10,045. Hindalco is a buy with a stop of 230, target of 246. And TCS is a sell with a stop of 2620, target of 2500.
Ashwani, you said that if you had to do something, you would go long. If that's the case, where does the stop loss come in at? Yesterday's low?
Basically, today's low, yesterday's low, thereabouts. What we are expecting is, a sharp move up and down within a range. The low and the high of the range is already available for the day. So maybe we'll go closer to the highs of the session. Again, probably will not cross it, but if we get there, you book out your long positions.
All right, Ashwani, a compulsive trader for the Nifty Bank would do what, given its weekly options expiry? We've been hovering around that 25,000 mark for the last few hours. In fact, yesterday's closing and today's first hour.
See, Bank Nifty is interesting because it's had several days of a bashing. So given that going into an event plus expiry, etc., I would expect a very sharp short covering by the end of the day. So that way, I think being long is a better trade than being short.
All right, Ashwani, thanks a lot for that. And as we speak, the mid-cap index has moved into the red. Just pull up the intraday chart of those crisscross lines, the advanced decline ratios. They've been intermingling for a fairly long time, and now the declines have gone much above the advances. As we speak, that spread has widened, and the mid-cap index itself is at the low point of the day. A couple of stocks which are not doing too well from the mid-cap arena. You should pull up the intraday chart of IndusInd Bank. Actually, that's not doing well. That is a nifty frontliner, but that one's moved to the low point of the day. Another couple of stocks which are not doing well from the mid-cap space. We had the real estate stocks yesterday. They were not doing well, and right now too, they aren't doing too well. Gen Irrigation at the low point of the day, and the PSU banks itself, Union Bank, IDBI Bank, all of them at the low point of the day. But how do foreign investors view the Gujarat elections outcome? That is the big trigger for our markets. We spoke with Catalin Gingold of Kartika Capital to get her sense of what the outcome could mean for the Indian portfolio.
We are very long-term focused, and we really do believe in the long-term secular story of India. We don't change the portfolio very frequently. Clearly, the Gujarat elections are very important and would have implications in terms of our beliefs, whether the reforms that Modi has started will continue or not. We don't think he will lose or BJP will lose the Gujarat elections, but clearly the volatility could be higher going forward if there is more uncertainty over the, political capital and strengths of BJP in the coming state elections. We have not increased our allocation. We've been really stable over the year, and we were very surprised how well India done this year, given it has really missed out. The economy has missed out on most of the cyclical recovery that we've seen everywhere else. We maintain our allocation, nevertheless. We see very interesting sector-specific and company-specific drivers that give us, high double-digit earnings growth, and we think these are sustainable for years to come. We're not particularly bullish on the rural economy, and I think the rural economy will find a much more sustainable growth driver over time as the capex cycle in India picks up, and that will generate a lot of jobs, and a lot of those jobs will be in the rural economy. That being said, it's probably not a very near-term story. We don't really see a recovery in the capex cycle in the near term.
All right, that's some opinion coming in as far as the election results are concerned. But let's slip into a short break. Come back, we'll focus on Neela Infrastructure on the back of a good set of second quarter numbers. We'll get chatting with Mr. Vadodria, the COO of the company.
Keep an eye out on SAIL. I think that stock's moving around. Remember, it's had a big run in the last couple of months on various hopes. Yesterday, yes, that JV that was long awaited was announced with ArcelorMittal, but unfortunately, it appears there is some profit booking. Post that, it's moved to the low point of the day. But the other stock that we're going to be focusing on is Neela Infra. Remember, that's in focus on the back of a good set of numbers that we saw in the second quarter. To discuss that and more, we're currently joined on the phone line by Mr. Deepak Vadodria, the COO of the company. Hi, sir. Thanks so much for joining in. Your numbers look quite good. The margin performance is something that looked very, very good. It's coming at around 18%. Is this kind of a number sustainable going ahead?
Hi, good morning.
Morning.
Yes, Q2 we've been able to deliver good numbers, and the margin has increased. The blended margin has increased because of more revenues coming in from PPP formats of projects. We have been bagging these projects in the recent past, and they have better profit margins than your conventional EPC order. So now we have order book split in 3 different business sets. Yeah. And more revenue is now starting to come from the other 2 revenue segments apart from EPC. That is what's pushing the margins up. Over the period of time, it looks sustainable on the current order book that we have on hand.
What is your current order book, Mr. Vadodria, if you could give us that number? And in that order book itself, how much is EPC? How much are the other sectors that you're speaking of?
Yeah. So on the quarter ending 30th of September, the unexecuted order book stands at 482 crores. Out out of which we fragment this into two different divisions because affordable housing is one of the other sectors that we specially focus on. So 51% of the order book consists of affordable housing,
Okay.
in which 29% is EPC. 15% is EPC plus PPP, which is a hybrid business model which we operate in the state of Rajasthan. And we have 7% of PPP orders. And on the civic urban infrastructure side, we have 49% of the orders, out of which 43% are EPC contracts and 6% are on the PPP model.
All right. So you have given us the breakup in terms of, the various segments of your business. What about geographically? Most of your orders, I think, are coming in from Gujarat and Rajasthan as well. If you could break that up for us. And
Yes.
are you looking to diversify to the rest of the country?
The orders are right now coming from 2 states. Yes, they're operational in 2 states. And the order group breakup right now looks pretty much even, where 50% of the unexecuted order books are from Gujarat and 50% are from Rajasthan. And going forward, we might expand into states which we see long-term progress in, like we see in Gujarat and Rajasthan. They've been one of the first movers in the affordable housing construction and the development model we really like. And we've been tracking a few states closely, but when the right time comes, we might enter. But no current bids that we've bid for, which are outside these 2 territories.
Mr. Barodria, you spoke about Rajasthan and Gujarat being the center of the work that you do. Both these states have the BJP government ruling right now. Is there any political risk to your business? Gujarat elections are underway. If there is an adverse result?
Well, I think it's speculative to talk about the election results, but what we are focused in right now, the government infrastructure or a development agenda which is pro-poor, which is to give affordable housing to the people of India which need. I believe that will continue irrespective of who remains in power, because this is not something which is negotiable.
All right.
For the development of the country.
Okay, so maybe post the election we'll try to get your comments, sir. But the other big factor that was driving the stock was that big demerger. When exactly is this demerger likely to take place? When will you get 1:1 ratio, of the demerged entity?
Well, the demerger has been filed, and the process is still on. The expected date by which the delisted and the demerged entity of Neela Spaces Limited will be listed, will be around July, mid-July, end of July. That is the timeline which we have on hand.
All right, and we understand that you are going to transfer some assets as well, and you've explicitly mentioned that there won't be any impact of the demerger given the assets are underutilized in one of your arms. So if you could tell us what is the nature of these assets? What kind of land do you have? What kind of land bank are you sitting on? Any non-core assets that you're looking to hive off as a part of this demerger as well?
Well, yes, a lot of these assets, or most of these assets which we are transferring to the real estate arm or the demerged arm is more to do with real estate business and not to do with infrastructure business. So they were non-performing assets on the balance sheet. And over the period of time, obviously, with the internal thoughts and external market forces and government stances changing over the period of last 4 quarters, made it more effective for us to get into real estate business again, with RERA sort of regulatory authorities coming in, GST coming in, a lot of clarity coming in on real estate, and obviously the government push on affordable housing. The assets that we're transferring to the other side are mainly pertaining to real estate, and most of these assets will be with affordable housing potential going forward into it. So the idea is to give 2 pure plays, and Neela Infrastructures Limited had a lot of assets which were not pertaining to the infrastructure business, because in FY 16-17 we had about 87% of the revenues coming in purely from construction business, and the rest of it was from unsold inventory and stuff from the previous project, because we've not developed the real estate project in the last 3 years. But with the change in stance of the government and obviously the push that the central government is putting on affordable housing, and we were one of the first movers in affordable housing, and we see the sort of demand that is there in the market. I think it makes sense for us to do realistic again.
All right. Thanks so much, sir, for stopping by and giving us those details. By the way, that's pretty big information that's coming up for you on the screen. The Supreme Court has increased the cap on Karnataka iron ore that can be mined in that particular state from around 30 million to around 35 million, tons. That's a very, very important statement, and that's a very, very important relief that's coming in for people who are buying iron ore, like Kalyani Steel as well as JSW Steel. I think we can pull both those two stocks up for you on the screen. Maybe, in fact, that should be good news for them. I don't know whether the stocks are not reacting right now, but that's very, very good news for both these two companies. Why? Because it's increasing the iron ore availability in Karnataka itself, and they have been asking for this for very, very long. They have been asking that increase the cap from 30 million tons to around 35 million tons. Remember, as of now, I think the total amount of iron ore that is being mined is around 28 million tons. So, in Karnataka, you're buying iron ore at a price that is higher than what you're buying it in the rest of the country. Why? Because their iron ore is sold by the e-auction route, and there is scarcity of iron ore. So this comes in as very, very good news for these two companies in particular, because they've been struggling in terms of sourcing of iron ore. And every time we speak to the management, they say that, we're not getting enough iron ore. We're trying to source it from other parts. So this is a positive for both these two companies, JSW Steel as well as Kalyani Steel, and other steel companies as well in Karnataka. They have been saying, please increase this, cap from around 30 to around 35 million tons. And that's come about. Short point, it's a relief for both these two companies. We'll try to reach out to these managements. I remember I think we should get Kalyani Steel if possible, and maybe even try to reach out to the management of JSW Steel. This is a relief that's coming in there for them. Higher iron ore availability in the state of Karnataka will definitely be good news for them.
Nigel, these are the users of iron ore, so higher means lower prices for iron ore. Does that mean bad news for makers of iron ore, someone like an NMDC or something?
Yeah, that's that's something that's debatable actually, Mangalam, because what the street is looking at in terms of NMDC is that maybe in fact there'll be more iron ore that will be available. There'll be some of these, like maybe a JSW Steel that's trying to secure themselves for captive iron ore as well. But the other point is that in fact, in Odisha, there could be some of these mines that could get shut down. But I think we have a reaction that's coming in there. So let's address this piece of news right away. Mr. R.K. Goyal, the MD of Kalyani Steel, joins in. Hi, Mr. Goyal. Thanks so much, sir, for joining in. Well, we're getting some news that's coming in there that there's not going to be, the cap on iron ore that's mined in Karnataka is going to be increased from 30 to around 35 million tons. You have been telling us in the past as well that iron ore prices have been zooming up. The availability is not there in Karnataka. How big a relief is this?
Thank you so much. First of all, it's a very good news that the cap is raised from 30 million to 35 million.
Right.
But there are a lot of other things which are required to be done. There is a cap on each and every mine.
Right.
So first of all, that cap has to be increased, enhanced, so that the miners can mine more and they can produce really 35 million tons. So once that is done, then definitely the availability should go up, and it will be a big relief for the industry. So, in fact, people like us are looking for expansion and are holding our plants basically because of uncertainty in availability of iron ore.
Right.
In addition to that, I think many more mines are required to be opened.
Mr. Goyal, so with this cap being increased from 30 to 35, what is your assessment of the near-term impact on iron ore prices, and how does that affect your EBITDA, at least in the near term? Expansion plans are for the medium to long term, but in the near term, do you expect a price change in iron ore?
No, I don't expect any price change in iron ore because they are already very high from NMDC, almost 13-14% higher than Chhattisgarh and Odisha. And most of the material is sold at the base price. Okay. So if NMDC keeps the base prices so high, then I don't think there will be any price reduction or any price discovery which will be lower.
So, Mr. Goyal, what you're saying is that it's increasing the availability. Pricing, you don't expect much of a change, correct?
Yes, that's right.
All right. Mr. Goyal, if you could give us a few more details. 30 million was the cap, that was there in place for the last couple of years. But if you could help us out with how much actually was being mined? 27 million, 28 million?
What it was around 27, 28 million. I don't have the exact number, but around 27, 28.
Okay, so getting back to that point then, now it's increased from 30 to around 35 million. Your estimate or your guesstimate, sir, how much can be produced in the next 1 year in the coming fiscal. When do you expect, this cap to move up from 30 to 35 million? I think it was the CEC that had recommended, and now the Supreme Court has accepted that recommendation. So if you could give us some details about what kind of, when could we see it move to 32 million tons of iron ore production coming out of Karnataka?
You see, first step is enhancement in
individual
mining quantity for each individual mine.
Okay.
Now, I am not really sure how much time it will take that to happen.
Okay.
Once that happens, then maybe within few months, people will be able to increase the total ore which is mined.
Okay. All right, Mr. Goyal. Thanks so much for stopping by, sir, and giving us all those details. So, yes, it's a relief that the iron ore availability is going to increase, as Mr. Goyal said. Pricing is not expecting too much of a change, but importantly, he's saying that on individual mines, there's a cap. So, you'd like to see that increase first. And then, in fact, you can move from 30 to 35 million. And that's very important as well. What he said was that even though the cap was 35 million tons, they were producing only 27 to 28 million tons. So we like to see that move higher. But that's the piece of news that came in there.
Now out in the markets, it appears fairly jittery. Start of the show, it was up about 20 points on the Nifty, and now we're back into red terrain, closer to the lower point of today's trading session. Remember, Ashwani had asked the intraday traders to keep the lower point of today's trading session as an important marker on the downside. UPL from the frontline space is at the low point of the day, and from the mid-caps, the mid-cap index, in fact, is at the lowest point of today's trading session. We have SAIL, which we earlier pointed out saw some profit taking, is extending those cuts at the low point of the day. PC Jeweler, that stock's moved what, about 120, 130% in the last 6 months. That one too is seeing some bit of profit taking at the low point of the day. We have Just Dial 2 selling off as we speak, and Federal Bank from the banking space selling off as we speak. So looks like it's a little bit jittery as far as the mid caps are concerned.
It's a nervous looking screen. Mangalam, we opened up in the green, that quickly got sold into. We're as flat as can be. But on that note, we'll wrap up on Chartbusters. You